morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two financially involved companies on the Trinidad and Tobago Stock Exchange. We're speaking, of course, about NCB Financial Group as well as its subsidiary, Guardian Holdings Limited. Now, both groups would have reported improved earnings for the respective fiscal periods. In the case of NCBFG for its fiscal 2025 ended September, as well as a 9-month period of GHL's fiscal 2025. Now, let's take a look at what both groups would have reported and what investors might expect in the coming months ahead. Turning firstly to NCBFG, well, the group would have reported an earnings per share figure in TT dollar equivalent of 42 cents per share, which was a 70.6% increase from that 25 cents TT dollar equivalent in the prior comparable fiscal year of 2024. Driving that performance, some component of operating improvement, while one-off improvements or one-off gains or non-recurring gains from its investee or subsidiary company would have contributed significantly to this outperformance or significant improvement in performance for the period. Net income from banking and investment activities up 18.1% from 5.28 odd billion to 6.2 billion TT equivalent. Overall net operating income up 20.2% from 5.24 billion to just about 6.3 billion. Operating expenses also climbed just a bit, about 5% from 4.13 billion to 4.34 TT equivalent billion. And overall, that profit attributable to equity holders improving that 73.4 odd percent from 583 million TT equivalent to just over the $1 billion mark. And again, I take that with a pinch of salt in terms of earnings from continuing operations or operating profits. The group would have been pretty much even, Stevens, just about a marginal 1% gain year over year. So mostly that discontinued operations or one-off gain from the sale of a subsidiary would have contributed to significant outperformance of NCBFG in its most recently concluded fiscal period. When we take a look at operating profit by segment or by activity, and inside here would be mixed up some of those one-off gains from the sale of subsidiary, we can see that the life and health and pension or LHP segment would have improved in TT dollar equivalent from just over $1 billion to 1.68 billion TT equivalent, a roughly 60% increase. Wealth, asset management, and investment banking improving from 86 to 307 million TT equivalent, a roughly 250% improvement, whereas general insurance also improved just about 86 odd percent from 267 million in that prior comparable period of fiscal 2024 to 499 million TT dollar equivalent, or just under the $500 million mark. The only other notable change across the segment or operating activities would have been in payment services, which would have almost doubled from 105 to 206 odd million TT dollar equivalent. Now, when we take a look at from a valuation perspective at NCBFG, we can see that in relative to its book value, the stock is trading at a fairly attractive price to book ratio, and that has been a combination of two factors. One, continuous growth in NCBFG's book value since fiscal 2022, increasing from $2.06 TT equivalent to its most recent figure of $3.57 a TT dollar equivalent. So a fairly significant improvement in book values there. At the same time, there has been a decline in NCBFG's price or stock price, falling quite considerably and at a faster pace, in fact, than the rest of the wider market, resulting in that price-to-book ratio continuously declining from about 2.2 times in fiscal 2022 to just about 0.6 times. And how does that compare to the banking sector? Well, pretty good, actually. From a relative value perspective, NCBFG, looking at the price-to-book ratio, is at the lowest end or offering relatively the most value to investors. Looking at the price-to-book ratio metric at 0.6 times, comparably, the sector average is about 1.1 times, with the highest on the other end of the spectrum, Scotiabank Trinidad and Tobago are trading at 1.7 times. And even with those price decreases across the banking sector stocks, we can see that most of the banking sector is trading at just around that 1 to 1.2 times price to book ratio. So at a price of $1.93, TT NCBFG is trading at a price to earnings ratio of 4.8 times, compared to the sector average of 8.8 times. Again, built into this price earnings ratio would be that significant one-off gain on an adjusted basis. It's closer to between 8 and 9 times, and offers investors a dividend yield of 3.3%, which is below the sector average of 5.3%. So with those higher banking and investment results in mind, stable operating results overall, those attractive price to book multiples, of course, the hurricane-related impact on its insurance and wider banking business in Jamaica is something to watch on the horizon, perhaps coming in more closer operating quarters in the future. Bourse is maintaining its market weight rating on NCBFG for the time being with our watch outlook. Turning very quickly to GHL, well, for its 9 months ended September 2025, the group would have reported an earnings per share figure of $5.52 per share, 114% increase from that $2.58 per share reported in that prior comparable period of the 9 months of 2024. Now, again, the gain on sale of its subsidiary, particularly in its insurance brokerage operations, would have led to that significant improvement in performance. Of course, from continuing operations, we can see that earnings per share would have improved just about 7.5% from $2.53 to $2.72. Driving that performance was an improvement in insurance service results of 33.7%. From 613 million to 820 million. Net income from all activities up 6.1% from 1.46 billion to 1.55 billion. Operating profits up just at 3.5% from 754 to 781 million. Ultimately, profit attributable to equity holders, inclusive of that one-off gain on sale of subsidiary, would have improved that from 114% from 598 to just about $1.28 billion. When we take a look at operating profit, you can see some notable changes, just about a 1.6% increase in terms of its LHP segment, the life, health, and pension in that green, from 757 to 745, from 745 to 757 million, rather, a 48.7 to 48 odd percent increase in the property and casualty segment from 182 to 269 million, and a fairly significant increase in its asset management segment from 35 to $42 odd million, roughly a 28% increase. Like NCBFG, we can see that with growth in its book value, GHL's book value rather, and a commensurate decline to moderating of its share price, we can see that the price to book ratio of GHL would have trended down over the past few years from 1.4 times in that 9 months of 2022 period to just about 0.6 times at the most recently concluded period in September of 2025, again offering relative value to shareholders looking at this particular metric. So at a price of $14.44, GHL is trading at a price to earnings ratio of 3.8 times compared to the sector average of 5.8 times. Again, baked into this trailing 12-month price earnings ratio is that one-off gain, offering investors a dividend yield of 5.6%, which is just above the sector average of 5.2%. Now, with that higher insurance revenue in mind, a relatively attractive dividend yield and fair valuations, depending on how you look at it, certainly attractive from a price to book ratio, but cognizant of those economic and fiscal uncertainties, specifically the impact of Hurricane Melissa on fiscal performance or economic performance in subsequent quarters, as well as the bank and insurer asset levy and the impact of that on GHL's overall earnings capabilities and earnings powers in subsequent periods. Bourse is still maintaining an overweight rating on GHL for the time being with a watch outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.